take a moment and look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to spread the word on how BTA analyze the market, how we look at the markets. This is Rod from BTA, and we are known as the middle traders. In this market update, we're going to discuss and we're going to analyze the major market index ETFs after the Fed interest rate hike today. This is June the 15th, 2022. And the Fed has raised interest rates again at their June meeting today, 75 basis points, 0.75%. So they raised rates in March, their March meeting, 25 basis points, 2.5%, 0.25%, I'm sorry, 0.25%, 25 basis points. Then they raised rates in May for the second time at their May meeting. So March meeting was the first rate hike, 0.25%. Then in May, at their May meeting, they raised it 0.5%, 0.50, 50 basis points. And today is the June meeting. Today they raised rates 0.75%, 75 basis points. So they've been increasing it by 25 basis points. First it was 25, then they did 50, and today they did 75. So that's the third rate hike. I want you to remember something. O'Neill said by the time we get third or fourth rate hike, it could be a problem. Okay, the market can really sell off. Well, we started seeing the sell off after the second one, right? Now, this is the third. They're going to meet again in July, and they're going to raise again. That's going to be the fourth. Soon, it's going to tip the economy into recession. Okay? And we're not going to know when the recession hit until we start seeing the unemployment rate ticking up. Remember, we had the yield curve inversion already, and it looks like the yield curve wants to invert again. Okay, it looks like it wants to invert again. So we're going to have another yield curve inversion soon, maybe, probably. Okay. Then we get a peak in the market. The market normally runs up and trades above the high of the day of the yield curve inversion. And then after that, we start seeing the unemployment rate increasing. Job losses. Okay. Job losses. And when we see the unemployment rate increase, shortly after that, we start getting a recession. Okay, so we're not seeing the unemployment rate increase yet. So the recession is not here yet. We don't have to worry about that for right now. And we don't have to worry about ourselves on when it's going to happen. The charts are going to tell us. As a matter of fact, this is the chart that we will be looking at to tell us when it's a problem. So this is the chart of the unemployment rate. Okay, this is the chart of the unemployment rate. All right, if you see here, if you notice here, we have this blue line, which is the unemployment rate. This is a weekly chart, by the way. See this blue line? That's the unemployment rate. And this is the cloud. This is the Ichimoku cloud, but just the cloud part, without the lines, without the moving average lines and things of that nature. It's just the cloud, okay? So we got just the cloud. This is our chart to tell us when the recession is about to hit, all right? So notice, if you look right here, okay, back in 2007 going into 2008, this blue line went above the cloud. Okay, it went above the cloud. And the cloud turned up. And you notice what happened shortly after that? We went into recession. Okay? We went into recession shortly after that. All right? See, we don't have to guess. We don't have to guess. We don't have to look at the news. We don't have to try to get other people's opinion. All we got to do is learn how to analyze the data, the charts, and we're going to know everything that we need to know. Keep watching. You'll see. Don't trust me. Don't believe me. This is not financial advice. You just keep watching. You'll see. Now, and then when the unemployment rate crossed back below the cloud, and the cloud turned from green to red, saying that the unemployment rate now is going down, notice what happened. The stock market shortly after that took off. As the unemployment rate was coming down, the economy was rallying. The Standard & Poor's 500 was rallying. The economy was doing great. Now, that brings us to 2020. Okay? March of 2020 with the corona collapse. What do you see right here? You see once again the blue line of unemployment rate got above the cloud. It got above the cloud. And you see here, it started pushing up. Okay? The cloud turned up. The unemployment rate went straight up. What happened with the Standard & Poor's? It went into free fall. Okay? It went into free fall. All right? It went into free fall. Bottom line, it went into free fall. So, we don't have to guess. It's right in front of us. Okay? All we got to do is know what to look for. It's right there. When the unemployment rate starts to increase, that's when you're going to see your recession. When the unemployment rate gets back above the cloud and the cloud turns up and turns green, you're going to see the economy, the Standard & Poor's collapse and the economy go into recession. So right now, we're still pretty low. The cloud is still red. It's down. We haven't crossed above it. Okay, but we've been selling off now because of these interest rate hikes. This is why I'm saying I don't think this is the big one. Okay, because when the big one hit, when the recession hit, I think we're going to sell off even harder. So I think, it's just my personal opinion, we had the yield curve inversion, but we haven't rallied back up to the high of the date of the yield curve inversion yet. So I think what's going to happen, we're going to get a relief rally inside of this downturn right here. See, because we're trading down now. There's no doubt about that. We're trading down, okay? No one can deny that, all right? You can see right here, we're trading down. No one can deny that, all right? That's undeniable, all right? The inflation is pushing the market down. You can see it right here. All right, let me raise this up just a little bit to make sure y'all can see it. All right, the unemployment, inflation is pushing the Standard & Poor's down right now. This high inflation, this war in Ukraine, this supply chain issues, interest rates are going up. It's pushing the market down, putting a lot of pressure. Oil is to the roof. Okay, oil is hitting high after high after high. It's pushing the Standard & Poor's and the overall market down. Okay, but I think because we had an inverted yield curve, we have not got the rally to back to the high of the inverted yield curve. The high on the date of the inverted yield curve. We haven't done it yet. Every time in history, every time. Do you hear me? Are you listening to me? Every time we had an inverted yield curve, every time in history, that was not the time when it sold off. We had another rally back to the high of the date of the inverted yield curve. And then, after we hit that high, we rallied back to that high. That was the peak. So we had inverted yield curve, then we had the peak was number 2. And then the next thing that's happened is the unemployment rate starts to increase. And that's when you get the recession. So I think we're gonna get a relief rally somewhere somewhere between now and the recession. It's gonna run back up near those highs. Okay, because it had happened every time in history. If it don't happen now, this is the first time in history that it didn't happen. Okay, I think we'll get a run back up to those highs. Then we're gonna see the unemployment rate get above the Ichimoku cloud. We're going to see this cloud turn up and turn green, telling us the rate of unemployment is rising. And then at that time, the recession is going to hit, and we're going to see the stock market roll over. Okay? So, these interest rate hikes, I said all that to say, these interest rate hikes is going to affect the economy. Soon we're going to get layoffs. Okay? Soon we're going to start getting layoffs. People are going to start losing their jobs. Okay? And then the recession is going to take hold. But between now and then, I really do believe we're going to get a rally in the market. And we may run up to the 150-day, maybe the 200-day. I think we get above the 50-day. Right, we're going to run up to that 150-day, that 200-day moving averages, stall right there near those highs, and then roll over as the economy tips into recession. I hope you hear me. It has happened every time in history. Okay, this is the Dow Jones Industrial Average. We had the rate hike today, and we pretty much went nowhere, really. Okay. Truthfully, lot of volatility up and down, very wide day, right? But we're still below a downward trending 5-day moving average. Okay, we're still below a downward trending 5-day moving average, and we're below a downward trending 9-day and a downward trending 21-day. That's just the bottom line. Okay, so it's nothing to talk about there. We're still below a downward trending 5-day moving average. Look, I would suggest people, well, we're going to be patient. Okay, we're going to be patient. I can't make suggestions. I can't give financial advice. I can only tell you what I'm doing. Okay, but we're going to be patient. We're going to be patient because just because we got this little rally this today, okay, it doesn't mean that it's all clear. Remember, this is just going to be our first day rally attempt for the Dow Jones. We have to get a follow through day. Our Bollinger Band strategy is still not there yet. As my son say, Daddy, are we there yet? No, we're not there yet. Okay? We're not there yet. We're not there yet. All right? So, we have to wait. We have to wait. Look at Lois. Lois is still clearly pointing down. Okay? Lois is still clearly pointing down on the Dow Jones Industrial Average. Let's expand this so make sure you can see it. You see it. It's still, price is still closed below Lois. All right? Look at it. Here's the today's action. We still closed below Lois, and the magenta line is still above price, and we got a downward trend in 21-day moving average. All right? It's clear. Yes, we had a little pop today. Yes, we had a little pop today, but that doesn't mean anything. Okay? The trend is still clearly down. The short-term momentum of the trend is still clearly down. Okay? It's still clearly down. So until that changes, we're going to be cautious. We're going to be careful. We're going to be patient. And we're going to wait for the opportunity to get the highest probability trade. We're not gamblers. That's not what we do. Be careful. Be careful. All right. Now, let's look at the Q. Let's go back to our moving average chart here. And let's look at the Standard & Poor's 500. Well, this is the SPY, the ETF that tracks the Standard & Poor's 500. Let's take a look at it, all right? Let's expand this. Look what's happening here. Yes, we had a little rally today. It traded up today, but what did it do? It traded right to the 5-day moving average and stalled and came back and closed below the 5-day moving average. I don't know what tomorrow's going to bring, but I can tell you one thing. Its price is still below a downward trending 5-day moving average. It's nothing for me to think about. I'm just going to analyze charts, put together a watch list, keep my eye on things, and wait for the opportunity. But right now, you're below a downward trending 5-day moving average, which is the white line, a downward trending 9-day moving average, which is the green, and a downward trending 21-day moving average, which is the yellow. And the 50-day moving average is right overhead and is still pushing down. Okay, so the momentum, the short-term initial momentum is still to the downside. The trend is down. You're below a downward trending 5-day moving average. There is nothing to think about as far as I'm concerned. I am not trading against a downward trending 5-day moving average. Okay, now look at the structural chart on the Standard & Poor's. All right, we didn't really talk about it on the Dow. Look at the structural chart on the Standard & Poor's. We're just getting above some of these internal trend lines. Okay, you're still just getting above some of these internal trend lines right here, right? But we still below this overhead resistance. We tried to test it, get above it, and we came right back and closed below it. All right, we got to get above this internal trend line. All right, I mean this horizontal resistance line. We have to get it. We're still above the internal trend lines, granted, but we have to get above this horizontal overhead resistance level. And look at it. That's our second low for the double bottom. We had the first low here. We ran up, got the middle point, had our second low right here for the double bottom, remember? So we got our overhead resistance right on that low of the second low. We tested today and we did not close above it. Until we close above that, you got more issues there, okay? And we still got this next downward trending internal trend line that we had to get over right here. Be careful. I'm telling you, be careful. Don't believe the hype. Don't get caught up. Yes, I told you it's a possibility they could raise interest rates by 75 points, 75 basis points, or a full 1%, and the market could see that as a good thing, and it rallies. But until that happens, you have to be careful. The bullish divergences. Go back and look at this video I posted it up not too long ago. We got bullish divergences all over the place. That could cause a bottom. A bottom in the market, and the market could rally. It's all over the place. But until it happens, until we see the chart gaining upward momentum, moving averages turning up, be careful. Be careful. There's nothing really changing on the guppy. You're not even above the short-term faster green moving averages. Okay, this is a daily chart of the guppy for the Standard & Poor's 500. The momentum is still to the downside. Look at the magenta line of closing prices. Be careful. It's going to set up, but you cannot get ahead of it. We have to walk with the market. All right, and look for clues for high probability trades. Now, look at the lowest. Look at lowest. Look at lowest. Okay, for the Standard & Poor's 500. It's still below lowest. Look at the magenta line of closing prices. It's above head. We tried to get above lowest and we pulled right back. The magenta line of closing prices is right above head. Lowest is stopped right around 381.22. We closed at 379, so we're still below lowest. If we still below lowest, and we still below a downward trending 21-day moving average, there is no launch of immediate swing to the upside. Be careful, okay? Lowest is telling you, be careful. The 5-day moving average is telling you, be careful. The price structure on the chart is telling you, be careful. Don't get courageous. All right? That's what we're saying here at BTA. I can only tell you what we're doing. Like I said, this is not financial advice, but wouldn't it be wonderful if it was? Okay? But it's not. Now, let's look at the QQQ. You see, it's nothing to do right now. We're analyzing the market day to day, looking for clues for high probability trades. Everyone who waited for high probability trades last week made almost $20 a share. Made almost $20 a share. Congratulations. Look, here's the QQQs. Here's the QQQs. Let's look at our moving averages, the daily chart, our moving averages right here. Look at it. Look at it. Look at it. They can't fool us because we're watching everything moving. This is what we do. They can't fool us. Here's the downward trending 5-day moving average, the white line. Prices are below a downward trending 5-day moving average. It's nothing to talk about. The green lines, downward trending green line, 9-day moving average, downward trending 21-day moving average, the yellow line. And look at the 50-day moving average, the red line, right overhead, downward trending. Look, the downward trending 5-day moving average, there's nothing to talk about. All right? The QQQs is clearly in a downtrend. The QQQs is clearly in a downtrend. All right? Now, let's look at the structural chart of the Qs. Let's look at the structural chart of the Qs. Okay? Let me raise it up so you can see it. Look, remember the double bottom? Remember the double bottom that we played so marvelously? Look at the double bottom. Here, the center point of the double bottom. We ran into the consolidation. Remember the double bottom? Well, look where prices is held at right now today. Okay? This is the first bottom right here. And this is the second bottom. We have horizontal resistance levels right at those levels. Well, we broke above the second bottom, but we traded right to the first one, this overhead resistance area right here, and we stalled. And we stalled. Okay? Here, let's zoom in right here. We traded above it, and we stalled. Okay? So you see where we stopped? We found resistance at these overhead resistance levels right here. We got above the first internal trend line right here. We traded down to it, found support, stayed above it, got above it. But now we found resistance right here. Traded above it, pulled back, and closed within it. We got to close above that. And we got to get above this downward trending trend line across the highs. And then let's see if we can test this weekly level right here. So we got overhead resistance. We below a downward trending 5-day moving average. There's nothing to talk about as far as this is concerned. We have to look for other opportunities. Look for clues. Look for clues. Now, let's take a look at lowers. Let's take a look at lowers right now. Let's take a look at lowers, right? Let's take a look at lowers. All right, here is, let's expand it. This is daily chart of lowers for the QQQs. Well, look, we're trying to get above lowers right now for the Qs. I give it that much. Let's see what happens. Right now, its prices is just below lowers. Okay, lowers is trying to signal maybe the Qs want to get above lowers. All right, we have to see. Let's see how this thing play out tomorrow. But until we can generate this blueness under lowers, right? The blue line under lowers telling us we got the launch of initial upswing. We have to be careful. And don't forget, we got this downward trending 21-day moving average. But it looks as though lowers may want to start to give us a signal of the launch of a new upswing for the triple Qs. But we have to wait because it might not make it. Because for the simple fact, you see where we got here, this overhead downward trending trend line, we might trade up to it and pull back. All right, we still below the downward trending 5-day moving average and downward trending 9-day moving average on our moving average chart. And you've seen what the structure chart showed you. We still got that overhead resistance from the first low that was made, okay, for the double bottom. So we have overhead resistance, but lowest is saying that it may want to signal. But she's not going to signal if it doesn't follow through. So we have to wait on the Qs. Right now, it's a waiting game. Wait and see. Be patient. The opportunity is going to come. The opportunities are going to come. But we traded right up to the downward trending 5-day moving average, and we pulled back. It's right here, y'all. Okay? We traded right up to the 5-day moving average and we pulled back. All right? But the Qs is the only one, I have to admit, so far, that's trying to say, Lois is trying to tell us it's a possibility. It's a possibility. Lois is trying to tell us it's a possibility that we may get the launch of a new upswing because we are testing to trying to break above Lois right now. Okay, so let's see what happened with the Qs. But right now it's still a wait and see. It's still a wait and see. Now, let's look at the IWM and that'll be it. Okay, we'll look at the IWM very quickly. This is the daily chart of Lois with the IWM, but let's go straight to our moving average chart. Look what happened, y'all. Look what happened. Listen, they're not going to fool us. Listen, 1 day of action is not going to do it. So we right here with the IWM, which we traded right up to the 5-day moving average and it stalled. Traded right to the 5-day moving average, it stalled and pulled back. We got that downward trending white line, which is the 5-day moving average, downward trending green moving average line, which is the 9-day moving average, and the yellow, which is the 21-day moving average. Here was our downward trending 50-day moving average. We're still below a downward trending 5-day moving average. There is nothing to talk about. There is nothing to talk about. We have to wait and see. Okay, we have to wait and see. Now, let's look at the structural chart for the IWM. Well, you see where it stopped at? You see where it stopped at today? Okay, I'm going to bring this up so you can see it, and we're going to zoom in. We're going to zoom in. Look where it stopped at. Right at this overhead resistance area, right here. Right at the overhead resistance level, right here at 171.79. We closed at 171.86. It stopped right there. We still got this downward trending internal trend line here. We got that 5-day moving average and the 9-day moving average sitting right there looking at us. Okay, we got to get above that. All right. Remember, this is this overhead resistance area where we stopped at is at this point. That's the second bottom from the double bottom. That's the second bottom. This is the center point. We stopped right at that overhead resistance, right at that second bottom. Are we going to get rejected there? We have to see. But hey, if the market rallies, we'll be ready. All right, let's take a look at Lois. See what Lois is telling us for the IWM. Well, she's telling us that it is still in a downswing. Okay, we're still in a downswing. Okay, we look at it. Let me zoom in so you can see it. You see the magenta line is still above price. See the magenta line is still above price right here. We're in a downswing. Okay. We're not in a bullish upswing. We're in a downswing. Prices are still below still below the downward trending magenta line. Okay. We got to get above that. We got to break above this downward trending magenta line to get a launch of a new immediate upswing, and hopefully we get the blue line underneath price. Right now, Lois is stopped at 173.42. We closed at 171.86. We got to get above Lois. We got to break above her, stay above her, and stay in the swing above her, and then we'll get that royal blue line below price. See that downward trend, the 21-day moving average right up there? Look, there's nothing to do yet. Lois is telling you the swing is still down. The swing is still down. And we're in a downtrend. Be careful. Right now, we don't even have to look at the weekly chart. It's a lot going on the weekly chart. We'll look at that tomorrow. But for right now, the daily charts is telling you everything that we need to know. That, hey, be careful. We are still below Lois on the daily chart. If you're below Lois on the daily chart, then the weekly chart is not a big deal. Okay? So be careful. Be careful is what I'm trying to tell you. Lois is warning us that we are still in a downswing. The trend is still down. Okay? Until next time, look out for the next video. There's nothing to do right now. We are just developing our watch list. We're analyzing our watch list. We're compiling the watch list. We're looking for stocks that may be ready, that's showing strength in this downtrend, that got earnings power, sales revenues power, that has future earnings and sales growth. Okay? And holding up relatively strong compared to the rest of the market. So we're looking for those stocks with low debt. Okay, very low debt. That passes our initial fundamentals. And then when the market is ready to turn, we'll be ready to go. We're going to share all of that information with everybody. It's not financial advice, but we're going to share what we're doing with everybody. Everybody. That we will give it to all the members at browntrainingacademy.com. Now look, see y'all in the next video. We're going to continue to watch this stuff day after day. Okay, it's nothing going to get by us. We're watching everything moving. We are premier analysts. We're analyzing everything that's happening. We got Lois. She's going to lead you in the right direction. We can't lose with the stuff Lois used. See you in the next video.